Hello everyone and dear listeners, I'd like to inform you that today, Tuesday, December 10th, there is no significant news regarding the gold chart or any other notable updates. For this reason, I won't be reviewing Forex Factory today. However, there are a few points worth mentioning about the start of the week, particularly the rise in gold prices. Yesterday, the price increased to around 26.70, 26.75 before correcting and ultimately closing at 26.60. This means it climbed from 26.30 to 26.60. The reason behind this movement was the anticipation of Federal Reserve news regarding a potential interest rate cut for the dollar, which boosted metals like silver and gold. On the other hand, the PPI and CPI news from China suggested the country had achieved stability itself, resulting in a weakened dollar. Overall, the upward trend in gold prices continues. Considering the current tense situation in the Middle East, gold has taken a bullish path. With this context in mind, let's analyze the gold chart technically, which aligns with the earlier discussion. On Monday, December 10th, there wasn't any major news except for China's CPI data. This news provided positive signals for the Chinese currency, which indirectly supported the rise in gold against the dollar. From a technical perspective, at 2:30 or precisely 4, we observed a spike in the first 4-hour candlestick. Buyers responded to market signals and began purchasing gold. After correction, the trend resumed its upward trajectory, reaching targets of 26.75 or 26.77 before another correction occurred. This time frame likely corresponds to around 5, coinciding with the end of the Frankfurt session, which caused a decline. Looking at today's chart, the opening price was around 26.60. You can see how the day began, with the several strong reactions during the session. The initial spike extended towards subsequent targets. Let me illustrate this more clearly with a yellow tint line, as it represents an important daily trend. This trend provided an entry signal at this specific point, confirmed by a precise candlestick pattern, making it a good entry opportunity. In this range, you could have entered at multiple points, placing a stop below this line. In the 1-hour time frame, after a consolidation range, a full body candlestick broke out of the 26.55 level, signaling the start of a new range depending on the reaction to this new range. The price might continue upward by the widest of the initial range. In the 4-hour time frame, the targets and the resistance levels align with this analysis. While today doesn't have significant news, tomorrow is critical, with CPI data regarding the dollar. As mentioned earlier, there are signals suggesting a possible interest rate cut for the dollar, which could weaken in further. The market's reaction at the start of the week has already reflected these expectations. Tomorrow's data is crucial, so pay close attention today. Most of our focus has been on this key issue, CPI data and its impact on the dollar's interest rate. If the rate is cut, currencies and gold indicates will likely benefit, strengthening gold. Moving on from gold, there isn't much else to discuss. Since we have some time left, let's briefly review stock charts. Over the past 2 days, stock prices have declined, which correlates with interest rate expectations. Note that this decline doesn't imply gold's rise is related. Instead, the dollar's drop has led to stocks falling. This situation differs because while gold rose, stock fell, a classic signal tied to interest rate cuts. Since this is a broad and macroeconomic topic, it cannot be fully covered in this 10-minute video. However, regarding the technical analysis I've shared, it aligns well with the chart you are observing. When it comes to a stock, news is often analyzed, forecasted, and even priced into the market in advance. This is evident in the indicators we are monitoring. Today our focus was more on fundamental analysis and news, aiming to familiarize our audience better with these aspects. Mastery of fundamental and macroeconomic concepts can significantly enhance your trading and investment skills. On the technical side, it's important to note that technical analysis and macroeconomic discussions are distinct areas. However, the more proficient you are in both, the greater your advantage. Currently, the price is moving within a descending channels and is near the lower boundary of channel. It might touch the upper boundary and then reverse. But it's crucial to observe the signals and patterns the chart provides based on your trading setup. You can enter trades accordingly, ensuring strict adherence to risk management strategies. At present, stop losses are frequently being hit, and reading the chart has become more challenging. However, a structured, comprehensive approach to analyze the market can lead to success. I hope you have had a great time and profitable trade. Wishing you continued success and prosperity.